Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, traders and investors. Welcome to this Thursday edition of Benzinga's PreMarket Prep, brought to you by Thinkorswim. I'm Spencer Israel, here with Joel Elconin and Dennis Dick. Got a good show for you folks today. A lot of stuff going on this morning. We do got some comments out of the Fed. We also got a couple of movers, well, more than a couple movers to discuss, and disaster stock of the day, and some a really interesting ratings note there from Pivotal Research on the media. We got some really intriguing ratings changes as well. Merck got a few upgrades today, so we're going to talk about that. Joel, actually, before we get to Joel, our first guest will be at 8:35. He's Mark Chaikin. He is, maybe you've heard his name before. He's been around for a while. He's had like a 50-year career on Wall Street. He is the founder of Chaikin Analytics. Benzinga is just now starting a partnership with Chaikin Analytics. So we're going to have Mark on the show to talk about his platform, his technical indicators that he came up with himself, and about his long career on the street, what he's learned. But before we do that, Joel, tell us how we're doing in the S&Ps this morning.
Down 5.25 points, went off the board at 70.50. At 70.50. Immediately went down to 2260.75. We are just hanging out here, 2265, 4 or 5 closes here. Nice consolidation. We'll see if this market can wake up and break out or break down. We have crude on the comeback trail, under $51 a few days ago, now closer to 53, trading up 65 cents at 52.90. Gold back over 1,200, up 840 at 12.05 even. That's just kind of a creeper rally here in gold. A lot of green bars, not a real big green bar, which sometimes you expect in the gold market. 8:03, Dennis, how you doing on this Thursday morning?
Well, just looking here, S&P futures, a little sell-off. Are you ever going to hit Dow 20,000?
Ever?
I had to bring it up.
Yes.
Do you think 19,999.63 is the all-time high? Just like S&P 666 was the all-time low. They like to go to these crazy numbers, all those nines in there. Maybe that's the high.
No.
Dougie Cass went all short, I think. That's what I saw go up on Twitter.
He went all short again?
It says he's all in on the short side.
We were talking about this last week, and remember we had the all-time high up there in the S&Ps, and I said, you know what, they're going to go clear those buy stops out there, clear out the paper, and then come back down a little bit. I don't know. I just don't think the rally's done yet, but earnings season will determine that.
You're right. It is going to be the catalyst here. But, we do have Fed talk, too. And we had Bullard giving some comments here just this morning here. And he doesn't look like interest rates, he thinks should be, flying up here anytime soon. And what were the specific comments? Because the financials are a bit under pressure here this morning.
There's no need to dramatically increase rates right now is pretty much the gist of it. No need.
I mean, is that new? Is that
news? The U.S. dollar gain hit pretty hard. Is it news? I mean, not to us. We've been saying it's probably only going to go up once or twice this year, but there's still believers out there that thought we were going to go up 4 times this year. Not happening. I think we're really lucky if we go up once this year. So, you think about that. If interest rate environment is, not going to be as, rosy for the financials, and if, all of a sudden the regulatory environment, if Trump doesn't come through with all the deregulation that he's talking about, you just wonder about the financials on this incredible 30% run.
Wait, and he also said that he doesn't see Trump's agenda having much impact this year on Fed policy. So
he didn't say anything good to help the financials.
No, and there's big expectations here for the financials. The only thing I wanted to point out, and this is going back a couple of days, you got the sell rating in Goldman Sachs from Citigroup a few days ago, and knocked it down and ended up green on the session, and then it added $3 the following day. So when a stock hits a negative catalyst like that, turns around, ends up green on the day, take a note for the following day. Still bunching up here, still major consolidation. haven't whacked these things yet. But tomorrow will be a big determining day for these financials as Wells Fargo, Citigroup, and Bank of
Yeah.
America give Q4 earnings.
Yeah, it's going to be difficult to tell, which way these things want to go because you've had the big run, you've had the consolidation period. A lot of time that is consolidation period is, for a move higher. Technicians will often say that. But when you have earnings reports coming out tomorrow, that changes everything. So obviously, these companies come out, say some good stuff going forward. They might be breaking out to new highs again. If they come out and disappoint or say some cautious comments going forward, they're going to hit them. So, who do we have tomorrow? We got Wells. We got J.P. Morgan. Is that the bulk of them?
Citigroup too, right?
I think Citigroup's Wednesday.
Citigroup's
J.P. Morgan, PNC, Wells Fargo, Bank America.
Oh.
Bank America too.
Those are all pre-market.
A big day. It's a big Friday morning. So financials
and,
gonna be
and,
moving there.
And BlackRock. So
Bank America, everybody be watching that report. I mean, the stock has went from 16 to 23 since its last report. So it has been an incredible run here for BAC. Valuation still is not that crazy. We've said that. That's the one thing the financials have going for them is, when you see 30% run-ups, you think, oh, man, they're way overvalued now. But they were really relatively cheap to compare to the rest of the market when the stock was trading at 16. It's just kind of playing catch-up a little bit here. So financials not crazy valued. You just wonder, if there's not a few people who are itching to take some profits.
All right, real quick before we move on, BZZT in the chat early today's asking about Square, and I just wanted to take interesting chart in Square. Bumped over 15 2 days ago, had a very nice string of 1, 2, 3, 4, 5, 6, 7 up days. Now that was ended yesterday. Was a slight down day. I'm keeping an eye on 1470 here. The last two lows, 1470 and 1471. Don't like the fact that it's not distancing itself from that level. So you could see the air here in Square between 1470. So if you're looking to, book some profits here, I'm keeping an eye on that 1470 level. And if you get back into the 15s here, I think you're going to find some sellers here above that 3-day high at 1519.
Yeah, it looks like 2 days ago that was the turning point when you have a big move up and then the reversal day. That's what it looks like to me. Just 2 trading sessions go, a little inside day yesterday. I completely agree with you. Take out that 1470 low. I think the stock could be back at 14.
All right, so let's move on. See what else we got.
Chad is buzzing on steel. Bob Wire talking the steel stocks here, and they are rolling over here this morning. And we had some comments and some downgrades from Credit Suisse here overnight, downgrading U.S. Steel, downgrading Steel Dynamics, downgrading AK Steel. All of those stocks are trading lower here in the pre-market. U.S. Steel trading down almost $1 here now, close at 35.20. It's 34.38. STLD is trading down. Well, it hasn't traded here this morning, but it's offered down at 36.77, which will put it down over 1%. And then AK Steel's been under pressure here all morning as well. It's trading down 2% in the pre-market. I mean, these stocks been on incredible runs here too, and they've had a lot of consolidation as well. So you could argue, especially on a stock chart like AKS, is this consolidation to go higher? But again, we need a catalyst to kick us over because there's a lot of resistance up here, especially on AK Steel when you get to about 11:30.
All right,
and now they're rolling over.
Rolling over might be a little bit strong of a term here. They're definitely. This AK Steel, I don't know if it's officially rolling over here. This one, the chart looks a little bit better, but let's see what's going down in the pre-market trading. And AK Steel trading at 1080. So let's see if we get back over $11. This one seems to be a little bit closer to the high of the move than X. For X, I'm keeping an eye. Pre-market lows right here where we're trading, but really, I don't know if I'd get scared out of this thing until it breached $33. You've been in a trading range for quite some time, really between 33 and 38. 33 represents the lower end of the range.
Okay, let's jump over to some other stocks that are in the news here this morning. First, let's just do a couple earnings stocks here. So KB Homes reported last night. KBH is trading down in the pre-market. It was trading up on the report last night, but they've rolled it over. And you know what? I'm having, a Groundhog Day here because it seems like the home builders, a lot of them report and they get the big pop, and then when the dust settles, they end up dropping. And I shorted KB Homes last night, and it chopped me around. I was shorting at 17, and then I finally just covered it. I think we're right around 17. It was basically a scratch trade, and now the stock's down, and I was like, I should have just held it. But I was thinking, I had that in my head already that I was going to roll over. It just took so long last night. It was trading up almost the entire after-hours session. I was like, I finally gave up, and I should have held it.
All right, Dennis, good call there. See a trio highs right at 17 from the beginning of the year. Quick spike over that, and took a little while. I don't know how long you held this thing for, Dennis, because it was bouncing around pretty good. Now you're
I
back.
held it for a little while. It was bouncing around between like 1680 and like 1730 for a while.
All right, pre-market lows way down at 1611, back up at 1644. What I'll be keeping an eye on here is 1660. That's the close. So if it goes green on the day, yesterday's high right up there at 1674. On the downside, that pre-market low, 16 bucks is huge. Four lows right in that $16 area as well as your pre-market low.
We gave you the technicals, but we didn't give you the data. How were the numbers, Spencer?
So I forgot about me. 40 cents for this for Q4 EPS. 40 cents versus 39-cent estimate. So beat by a penny there. For the revenues, 1.19 billion versus 1.15 billion. So beat on the revenues. They reported Q4 deliveries up 19%. The backlog is up 11%, and net orders are up 20%. So all things considered, pretty good.
Yeah, and that's why I was trading up, but it has rolled back. And again, just the home builders I've seen in the past that they beat by a little bit, they pop them, and then they eventually drop them, and that's exactly what happened. In KB Homes, Delta DAL has also reported here this morning. It is trading slightly down the pre-market. Spencer, what's a Delta report look like?
Yeah, Delta reported Q4 EPS 82 cents. That was in line with the estimate. Revenues of 9.46 billion versus 9.40 billion, so a slight beat there on the revenues. Q4, I said adjusted EPS already, so that was it. The EPS met, the revenue beat.
Not a great report, but not a bad report either. So it's wishy-washy, and the market's playing wishy-washy here with it too. It's just kind of hanging out. I know it just started ticking at 51.20, but really, it hasn't really. The Bulls and the Bears are still battling it out here. It's actually traded a little bit of volume, 44,000 shares here this morning. Just most of that right around settlement at 51.44. So still a battle between the Bulls and Bears in this one.
Pre-market high, that coincides with the high of the move. Pre-market high comes in at 52.26. You had a high at a little bit above that, 52.76. I think you find sellers again if you can get up near that 52 handle, 51.66. That's close. That's a big number. If you're trying to hold on to profits on this thing, you want to give yourself a little room. 49 looks like a good support level. I don't know if you want to give up $2.5, but don't want to call this rally over here until we breach 49.
So Apple here coming into a big number, 120. This has just been the number here. I'd imagine there's some size up there in the book if I could see. It's a NASDAQ book, so I don't think the NASDAQ data's out there for their book yet. But 120 is going to probably be a big psychological hurdle for it as well. Got up there yesterday to 119.93. So if you're playing the first time off the 120, congrats, you're already up a point. The stock pulls back 70 cents here this morning with the overall market. But I saw something go by my Twitter timeline too that Apple is looking into producing its own content.
Yeah, well, so not in the same vein as like a Netflix might, but Apple is trying to differentiate itself from Spotify in terms of their Apple Music platform, which is like $10 a month. I don't get Apple Music, so I don't really know what it has. But they're looking to like start maybe in 2017, like have a couple of original shows. So it wouldn't be like a $1 billion venture like shows left and right like Netflix and HBO. It would be a couple of original shows that would be on the Apple Music platform that would differentiate it from Spotify, which they're having a hard time doing.
What do you think about this, Joel?
Man, I mean, they need something. I don't know. This doesn't sound like a blockbuster.
No.
Really to change things on the bottom line. I was leaning short in this thing. Didn't take any action. I thought maybe we're going to get a triple top there at the 119.40 area, but we took it out yesterday and got 119.93. I mean,
$100 stock though. You're nickel and diming yourself.
Yeah.
I think 120. It's such a big level. It failed the first time. Second time sometimes. Third time's usually a charm. If it goes up to a third time, I'd say probably buy it, but. I don't know. I think 120 is still going to be resistant. Big hurdle. Hard to come in here buying it right now at 119 when the stock was
Yeah.
105 a month and a half ago, and there's all kinds of overhead supply up here.
Uh, you don't have any of your longer term charts up, right?
I can.
Well, no, I don't want you to. I was gonna throw a
Okay, I haven't looked.
free lunch for you. Free lunch. This is no wager. If you can come within a month of when the last time Apple traded over 120.
Oh, I don't. Within 1 month, I
Yeah.
would say January 2016.
You got a free lunch coming. No,
And I didn't
no,
even
no, wait,
look.
no, you're wrong. 120.
Oh, I'm
It
wrong.
was November. It was
Oh,
November
I would have went
15th.
December 2015. I would have been good to go.
Yes, if you would have.
Oh, I missed by a month. Wah, wah.
123.82. But interestingly, the high in December of 2015, 119.86. So Dennis is spot on with that
That
120.
works, doesn't it?
I said over 120.
Oh, he got me on that. He nickel and dimed me again.
I offered you a free lunch. I think that's the first time in our 4 years of doing the show that I ever just threw out a freebie to you.
Sure. I would think you'd never do that.
That was close, and I'm never doing that again. That was
Yeah. He's like, man, this guy's good. He almost got it. I was 1 month off. I did not have the weeklies up either. That was completely guess. So, all right. So, anyways, Apple, you know my thoughts here. I'm still long in full disclosure investment portfolio. Long term, still love Apple. Short term, I think it might run into some struggles at 120. Okay, so a couple other stocks here that I had written on my sheet. Merck had an incredible day there yesterday. Also, obviously, Bob Wire had a good trade, so congrats, Bob Wire. Merck got the pop. It pulled back a little bit there. Now today, though, the analyst chasing price party here. We call that ACP. Morgan Stanley upgrading it. I saw Guggenheim with positive comment. I saw a couple other ones go through there too. Spencer, who are the other analysts here? We had a couple upgrades here for Merck this morning.
I just saw Guggenheim and Morgan Stanley.
Okay, I saw another one go by too. I thought, but anyways, so maybe it was a price rating change or something. But Merck is trading up 1.5% here in the pre-market. Positive commentary from all the brokers in the world. I got 63 number that Bob was talking about. I think if it gets up there again today, I think it still remains major resistance.
Yeah, Bob Wire, we were trying to figure out when that opening print was because I see a 62.34, but 63.16, that was a high from yesterday. I'm sure people are relishing another chance to sell it at that area, so we'll keep an eye. Trading up a little bit in the pre-market, but good job there, Bob Wire.
And then also on my sheet to talk about here, just looking at upgrades, downgrades here. We have Red Hat getting upgraded, Evercore, but we had a lot of other upgrades, downgrades here too in my sheet.
Look at this pivotal research.
Yeah, that's what I was going to say.
Okay, this is
That is
interesting.
a lot of downgrades.
So
There's the highlight, Spencer.
So I'm very interested in media stocks in general. This is right up my alley. So here's what they did this morning. They downgraded Adobe to hold. I don't really care about that. They downgraded CBS. They lowered the price target to $67. They downgraded Twitter to hold. Downgraded Walt Disney to sell. Downgraded Discovery to a hold. Lowered the price target to $28. Downgraded Salesforce to a hold. Price target is $76. Downgraded the Interpublic Group IPG to hold, lowered the price target to $26. So Disney, Twitter, CBS, Discovery, Salesforce, the big ones there, all downgraded.
Disney to a sell. That one's interesting to me. I'll tell you, same thing with Apple, the 120, 110, big number here on Disney. Didn't quite get there yesterday, got up to 109.49. That remains major resistance. I think at 110, big psychological hold number could stop the stock for at least short term here. It's had a big run from 90 up to the 110. Everybody hated it back when it was 90. They all love it here now. Again, media just chasing price as well. I'm a seller up at Disney in the 109s.
109.49, that was the high from yesterday, so we'll see if that comes back into play today. Some paper probably at that 110 level as well. Coming back on the downside, we're trading at the lows of the pre-market session. 880 is the low, 881 print. A little bit of volume trading. Have to take a look, though, and haven't even reached yesterday's low. Yesterday's low at 108.38. See what happens there. If not, you fall into the lower 107 handle. Just don't know how influential pivotal research is. You are getting a little move in the pre-market, but not on a tremendous amount of volume.
They also downgrades Twitter from buy to hold here, change the price target from $26 down to 17. Basically where the stock is trading right now, 17.15. It's down 15 cents here in the pre-market. I know you've been itching to do something long term. We had a good discussion over the weekend on Twitter, Joel. I don't know if you want to jump into that discussion or not, but I'm of the opinion, I'm still scared, and I know this sounds crazy, but I still think, Twitter, you can say it was at 70, it's at 17, it looked cheap relative to where it came from. But from a valuation perspective, it still seems kind of expensive to me. That's why I'm not long Twitter. I bought it back at 14 back in the day. And I don't know, even at 14 now, I start to challenge it. Because right now it's 17, or 17, 15. The market cap's still $12 billion on this thing. So here you got a company that really isn't growing. The vast majority of the population doesn't really use it or get it. I mean, stock traders love it. I love it. If you're into sports, that's, cool too. It's a great news source. Even last night, just to show you, and then we'll go on a tangent here about Twitter, but I'm looking at NJR last night, which is New Jersey Resources, and it's trading higher in the pre-market. I was like, I can't find anything. I'm looking everywhere. I'm looking at all the major media. Can't find any news on it. And I actually went out to Twitter, and if you search, and you go search under, the latest, you'll get all the tweets on it. And it's just one tweet that says there, it's from a person that's never treated this DCV. It says, Iberdrola, interested in New Jersey Resources, NJR, according to expansion. I'm like, okay, well, I don't even know what expansion is, so I have to go do some Googling then. Expansion's some Spanish newspaper. So then I'm like literally last night, like Googling, I'm reading this expansion newspaper, trying to find the article, but it's in Spanish, and I don't speak Spanish. So I'm like looking at it, trying to get the translator on there, trying to figure it out. I can't find, the article he's talking about. So I tweet back at this guy, DCV. I'm like, where, did you get this? It was in the print edition, and he actually sent me a pic of it. And in the pic, you can see, that, okay, I can, if I look at even my timeline here, I can actually see it says Iberdrola pon on su radar, it looks like, on New Jersey Resources. So it looks like a big article in the print edition, and it says on su radar. So I'm like, I think that means it's on Iberdrola's radar. So Iberdrola, big Spanish utility company, looking to maybe they're interested in New Jersey Resources. So that was the source. So looking everywhere, I found it on Twitter. So Twitter, great news source, you can find news sometimes because all it takes is one person to tweet it and boom, it's there. So, that's useful for a stock trader. But I'm just concerned, like, if you're not a trader, if you're not, into, the little niche, there's a lot of different types of chat. Like my wife doesn't use Twitter at all. None of my friends use Twitter at all. A lot of them are on Snapchat. They're on different forums of communication there. And I'm just concerned on Twitter, it's just not the mass media appeal, and it's not growing anymore. So then you start to think, okay, well, if it's a news company, which, I just made the argument, if it's really a news company, then maybe you got to stop valuing it like a social media stock, stop comparing it to, the Facebooks of the world, and start comparing it to the other news companies. Well, if you start doing that, then it gets scary as a valuation, because you can look at a company like Viacom right now, which is one of your biggest media companies in the world, and obviously, it's, they're a victim of, not, they're old school, but Viacom's market cap is 15 billion. I mean, here's one of the bigger media companies in the world with a market cap of 15 billion. And you got Twitter. If you're thinking they're a media company, they're relatively small probably compared to Viacom. They don't make money, and their market cap's 12 billion. I mean, it starts to get a little bit scary. That's my argument against Twitter.
Something I read is this is kind of a best case scenario for Twitter, where our president-elect loves their platform. He's on there every day, and if our future president is on is on your platform, and your audience still isn't growing, and he's tweeting about it, and your audience still isn't growing, then that's a pretty big ceiling.
I think, and I think the valuation scares people away. I think that they wanted the $24, $25 takeout price, when Disney was sniffing around, when potentially Google was going to sniff around. But then they look and, what's to stop a company like Facebook from, inventing something like a Twitter? Or, I just don't know if they even the bars to, the to entry are even that high here. So I'm concerned here just with Twitter, because I think it's still a little bit expensive. I mean, if it was traded at $1 billion or $2 billion, the name itself is worth that. But at $12 billion, it's still pretty expensive.
Yeah, I think you kind of talked me off the cliff when we were going to valuation standpoint. If you put it into perspective, comparing it to the other media agencies, very expensive. But then, you mentioned the valuation compared to like a Facebook or something. But, Facebook...
It looks cheap when you evaluate against Facebook, but the people who are on Facebook pretty much aren't using Twitter. I mean, some of them are, but majority of them are like Facebook. They use Facebook or they use Snapchat. Twitter wanted to be this communication source for everyone, and there's a lot of other, things to communicate or ways to communicate in social media.
Yeah, I mean, they're getting some deals with the NFL. I see they did
Yep.
something with the PGA. Let's see what happens with the MAUs. I mean, the thing for me that I just can't get out of my head is just that it's the quickest way to translate news. And, give the example of what happened, unfortunately, at the Fort Lauderdale airport. Ari Fleischer, the former not speaker, what was he, press secretary or whatever? He was there. He tweeted it out. It's the quickest way to disseminate news, not only on the markets but for sports. So, what's the value of that? It's hard to determine. We'll see
It's a
what
great
happens.
media source for sports, like we were saying, sports and stocks, which we love, Joel. So we love Twitter.
All right, 826 here. S&Ps have rallied back mid-range on the session. This 2265 number, I just can't get this out of my head. I just don't know if it's going to be support or resistance. A lot of consolidation here at this level. 2265, that's my level for the week, Dennis.
Okay, so we got another question here. This came from Ethan G in my Twitter, and Ethan G obviously is in our chat as well. So I appreciate the question here, Ethan. He's asking me, just looking here. So it was tweeted by Reuters yesterday, NYSE to expand floor trading to all U.S. equity securities. And Ethan G, I retweeted, and Ethan G says, okay, hey Dennis, how will this affect us retail traders? So I think this is a great question, something to address here. And, I love the fact that the NYSE is finally going to trade on their floor like NASDAQ stocks. They're going to trade all U.S. equities because currently Apple does not trade on the floor of the NYSE. Intel does not trade on the floor of the NYSE. Microsoft does not trade on the floor of the NYSE. It trades in their ARCA vehicle, but does not trade on the physical floor of the NYSE. So on the NYSE, which is like 18% of your volume, if you go through the NYSE, and obviously a lot of things don't trade on the floor anymore, but even their electronic NYSE primary market does not trade Microsoft or Apple. So what I find interesting, is why didn't they do this a long time ago? I mean, they're missing out on potential volume. The second thing is, I think it's going to be really interesting around the opening events because right now, in 2 minutes we get the imbalances from the floor, the 8:30 imbalances for the opening for the NYSE stocks. NASDAQ doesn't publish their imbalances till 9:28. They literally only give you 2 minutes. So Apple, that's why I never, when I'm tweeting imbalances, I never talk about the NASDAQ stocks because that information isn't out till 9:28. So, and I'm trading on it there. I don't have time to tweet it at 9:28. But I think we're going to start getting imbalanced data, obviously, at 8:30 in the morning for Apple. That's awesome. It's more information for us. So all of a sudden, we get a little feel. The second thing is there is a big NSDQ opening in Apple. If some volume actually goes to the NYSE stocks and goes through, the designated market maker on the floor, maybe there's going to be, a pretty big opening event for Apple on the NYSE floor too. You could potentially get times where stock might open at one price on NSDQ and open at a significantly different price on the NYSE floor. So there's arbitrage opportunities here as well. I mean, high-frequency traders are going to probably take the bulk of those opportunities, but it's very interesting overall, the dynamics here. How much of the volume is going to go from the NSDQ Open to the NYSE Open. I think the NYSE Open, I like the process a lot better. They give information as early as 8:30. So, I've always, enjoyed the NYSE Open more than the NSDQ Open because the NSDQ Open is a little more opaque than the NYSE Open. So I like that, from an opening and closing perspective, that Microsoft, Apple, and NASDAQ stocks and all U.S. equities are going to now be traded on the NYSE floor.
And taking some of that liquidity away could be beneficial. I was just looking at immediately I think of plays in the stock market. Look at this ICE chart. Who took over the NYSE? This thing is practically up at all-time highs here.
Yeah.
And also SIBO has had a nice run as well. CBO.
Exchanges have been hot.
Yeah, the exchanges have been. What's the symbol for?
They reinvented themselves. I mean, the exchanges before made the money on the trades. Now they make the money on the data. They're selling the quotes, just like, and I complain about this all the time, yet I write a check to ICE every month, I think for $156 or something, because I have all my quotes. I have my NYSE Open book, which is $60, and I have 3 different terminals that are getting NYSE quotes. And because I'm a pro, if you're retail, they charge like $5, or they give them to you for free sometimes through some retail platforms. platforms. Your broker probably absorbs it. But because I'm a licensed prop trader, I have to pay the prop rate, which is, if you have one terminal, I think it's like, I don't know, it's like 120. If you have two, then they cut you a break and they go down to like 80 each. If you have three, then they cut your break to like 60 each or something. I guess that's how I'm getting to the 180 or what, $200 that I pay a month to ICE every single month. And 10 years ago, I didn't pay anything for quotes. So I hate it as a trader that I'm paying for quotes. But this is why these companies, continue to, outperform the stocks, because they reinvented themselves. They went from making money off the trades to making money off the data.
What is the symbol for NASDAQ?
NDAQ.
NDAQ. Is it getting hit on
And it's
this?
been a hot one too.
Yeah.
No, it didn't get hit. And this was announced yesterday. I don't think this is going to be something that's going to be like, whoa, this is so bad for NASDAQ. I think it's something that should have been done a long time ago. I mean, why did the NYSE not trade Apple, on the floor? Why not? Well, just because, it's not our stocks traded. I mean, that's silly. So, NASDAQ traded all the New York stocks.
Yeah.
I'm shocked that they didn't do it years ago. And I find it annoying that, I can't trade Apple on the NYSE primary market. So I'm going to be happy to do it. So I love it. I love it that they're going to be on the NYSE floor.
Ethan's worried that the change. He's wondering if the change is going to affect volatility. I mean, I think maybe the opposite. I think if you'll have some arbitrage,
More liquidity.
Yeah. Some we haven't checked in on the IEX lately. Maybe we should try and dig up a guest from the IEX. I wonder how this volume's doing with that. Dennis, do you ever send any orders to the IEX?
Yeah, and obviously if they're on the top of the book, you've got a route there, because they'll be protected. It's a protected quote if it's at the top of the book. So yeah, the odds trade goes through IEX, but there's not a lot of liquidity out there with IEX. So the biggest problem when you're starting an exchange, and it's the uphill battle, is liquidity begets more liquidity, meaning traders go to where the trades are. So if I'm looking to buy the offer, I'm going to go where the offer is. And if the offer is on SDQ, or if it's on Edge, or it's on NYSE. But because there's not a lot of offers on IEX, then a lot of traders aren't going there in the first place. So, it's really hard to build it like that. So, Edge, and BATS, they built it up, back from 2007 when they were ATSs, and obviously now they're full exchanges, but it takes a long time. So, IEX, I love those guys. I think that they, they're all about, fair markets, what they stand for. I love, Brad Cotts, a great guy. But, it's a difficult uphill battle when you're starting an exchange, and it's not going to happen overnight. I hope that they can continue to slowly build up their volumes, and I hope it's a place to go. But as a trader, I'm going to go to where the action is, and if there's nothing on IEX, I'm not going to trade there because there's nothing there. So why am I going to throw a bid out on IEX if there's nobody going to hit me on it? So that's, the problem. That's the uphill battle that IEX faces.
All right, Dennis, we got about another minute here before we bring in our first and only guest of the day, Mark Chaikin of Chaikin Analytics. Is anything you want to touch on, or should we go to break a minute early?
I can give you one more stock if you want, and that stock will be First Solar, because it had a pretty good day there yesterday. Solar stocks actually started to pop yesterday, and just another one on my radar. I was just saying to you on the pre-market show, Canadian Solar had a pretty good pop yesterday, but then pulled back. I kind of like the setup here. Lots of lows, 12.50. So I'm all about risk return. So that'd be your out if you're buying it here this morning. And it might pull back with the overall market a little bit. Let's say you can pick it up around 12.60 or 12.70. Maybe you stop yourself out at like 12.25. So your risk 40, maybe potentially about 40 cents or so. And, I think, with the First Solar pop, this thing could ever sneak its head above the resistance around 13.30, it opens up. So, setting up like a 3-to-1 risk reward ratio would be like trying to pick it up here around 12.70 early this morning if it pulls back, stopping out at 12.25. So there's my risk around 40 cents. And, maybe, target would be like $14. And if you had that, then you're setting up a $1.20. I got my 3-to-1 risk reward ratio. So I think there's a setup here for maybe trying the long side Canadian Solar. Again, I did a lot of things there. I defined my out, like Jeff Goldman was saying yesterday, and I set a target as well. I set the target at 3-to-1, meaning, if I'm wrong, the nice thing about a 3-to-1 target is when you're wrong, you can be, and you hit your target once, you can be wrong 2 times for every time or 3 times for every time you're wrong. Or for every time you're right, and you can still make money. So I love the 3-to-1 risk reward ratio.
35.50. I'm looking for that as a breakout in First Solar. All right, we're going to take our first break of the day and bring on Mark Chaikin. He's the founder of Chaikin Analytics, and he's come up with a pretty interesting model to analyze stocks, I think, for short-term traders as well as long-term investors. We'll be right back with Mark.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick, Spencer Israel behind the glass, and we have Mark Chaikin on the line of Chaikin Analytics. Mark, how you doing on this Thursday morning?
I'm doing very well, Joel. Thank you for having me.
All right, so you got 40 years of experience on Wall Street as a trader, a broker, a stockbroker, analyst, options trader. What inspired you to start Chaikin Analytics?
Well, I was retired for 10 years after selling my previous company to Reuters, and after the financial collapse of '08, I read an article that said $300 billion was being transferred from full-service brokerage firms like Merrill Lynch and Smith Barney to self-directed accounts at online brokers. And I immediately thought, wow, these people don't have either the tools or the temperament to manage that kind of money. Obviously, people were disenchanted with their advisors, with Wall Street in general after the collapse. But you still have to have the resources to effectively manage that kind of money. And so I started Chaikin Analytics with the goal of leveling the playing field for self-directed investors by creating the kinds of tools for them that I had created for institutional investors for 30 years.
And you've come up with the Chaikin Power Gauge, a 20-factor alpha model proven effective at identifying a stock's potential. And I know it looks on the long side and the short side. Just give us a couple of the factors that go into this alpha model.
Well, we break them down into 4 components, Joel. The financial metrics are sort of value metrics that a Warren Buffett would look at, and there the 2 key metrics are free cash flow and price to sales. You don't want to pay too much for a dollar of revenue. Good examples of that now are stocks like Tesla, Netflix. And then we look at earnings because earnings are critical, but in that component, earnings surprise is really important. And we're right at the beginning of earnings season. As you know, and have probably been talking about on the show. And when companies report better than expected earnings, you typically get a reaction to the upside in the stock, and then analysts start raising their estimates, and that's another factor in the model. But the key is when companies disappoint, they typically get taken to the woodshed, and that syndrome tends to repeat over quarter after quarter. It's sort of like the old saying that you can't turn a big ocean liner around in a minute. So when companies start to underperform, there's usually an underlying reason, and that persists for an extended period of time. And then we also look at sentiment type indicators, whether the insiders are buying, what the shorts are doing, and then the analysts finally, whether the analysts are raising or lowering their estimates, and whether they're changing their opinions about a stock. Only 15% of the model is technical, 85% fundamental, and we do this for 5,000 U.S. equities, and we update it nightly.
I see the experts on your Chaikin Power Gauge there, Merck. What, so when you're looking at an analyst upgrade or downgrade, is that automatically, if they upgrade the stock, is that automatically bullish? Because a lot of times, like Joel and I note, and you note sometimes when analysts get too bullish sometimes, like they're all jumping on the bandwagon, that actually, when you get 4 or 5 upgrades in a row, sometimes the stocks turn around eventually and start going the other way just because they're all on one side of the trade here. Do you incorporate some of that into that as well in your secret sauce, or is it, upgrade, it's bullish, downgrade is bearish?
Well, we're looking at the trend of analyst estimates over a 30-day period. You're absolutely right. There are times when analysts lean all toward one side of the boat. Tudor Jones is legendary for having said, if you want to make money in the market, look at who's in the most pain. But that also applies when people are too bullish. The reason we don't do what you just suggested is that 15% of the model are technical indicators. They're proprietary to Chaikin, like Chaikin money flow. And this model is eclectic. It finds a lot of different ways. So no one factor, they're not equally weighted, but no one factor really influences the model. Think back to your grade school days when they gave out report cards. I don't know if they do that anymore in this electronic era, but there used to be a column called Works and Plays Well with Others. And I typically didn't do very well in that, but these factors work and play well together over a 20-year back-tested and real-time period. So no one indicator overweights the others.
We're on the line with Mark Chaikin. He's the founder of Chaikin Analytics, developed a power gauge for analyzing stocks. So, Mark, who should use this tool? You have an interesting story with your wife. Who's best suited to use this tool, and what kind of background or experience do you need to utilize it?
Well, that's what's interesting about this approach. We output the power gauge rating as a gauge, and then we encourage people to combine it with 2 technical indicators, not 22, just 2. Relative price performance to the market, call it Chaikin relative strength, and Chaikin money flow. And the reason is Chaikin money flow measures institutional buying and selling, and relative strength is a reality check. No matter how good your model is or fundamental research, if the market doesn't agree with you, at best it's dead money, and at worst it's a disaster in the making. So the power gauge rating is being used by people at all levels of sophistication, from novice to knowledgeable. Some of the biggest hedge funds like Paulson and Soros use the product. And it's also being used by people from options traders to retired people who are managing their 401k plans. The reason is we preach a methodology and teach it that's based on the KISS principle. Keep it simple.
Mark, you've also got some other features here. I was just on your website there, and you've got, stock rating workspace. You also have stock screener here. What's your screener? What do you have? Because I love stock screeners. Obviously screening for the criterion that you want to meet. What do you have in there?
Well, we have something very, very proprietary in there. We have 20 factors in the model, 4 components, the rating. Our screener is the only one that actually enables you to screen on quantitative factors that are part of a proven model. And then you've got things like style and market cap and technical indicators similar to what other screeners might have. A very effective way to, as you say, zero in on stocks that meet your criteria. But Dennis, there's something even more exciting that we just released 3 weeks ago. It's called our Discovery Engine. Someone sort of said it was a reverse screener. The Discovery Engine uses the same kind of technology and logic that Spotify uses to find music that you like and Netflix uses to help you find films. You basically seed it with a stock, and then it finds similar stocks. So right now the financials are very strong. JP Morgan's going to report earnings tomorrow. It's got a bullish Chaikin power gauge rating. If you type JP Morgan into our stock discovery engine, you're going to get 5 stocks, typically large cap banking stocks with similar credentials, similar characteristics to JP Morgan. On the other hand, if you type in a bearish stock like a Coca-Cola, you're going to find other bearish stocks, typically in the beverage sector, but then you'll also find swaps, stocks that you can use to get out of Coca-Cola if you're unfortunate enough to be in it, because it's been an underperformer now for a year. that might be in the same industry group or the same sector, consumer staples. So we think the screener is powerful. It's been out there for a year, but the response to our stock discovery engine has been extraordinary because a lot of people are used to searching on Amazon or Google or Netflix. And in essence, our stock discovery engine is doing for investors and traders what those tools are doing for the public at large.
When you're talking about this and people that can use it, share with your story about your wife and what happened to her during the financial crisis and how she made use of it. Because I think people a lot of times they look at this and they're like, this is just too intimidating. It's over my head. Why don't you share that story with us?
Well, thank you for asking that because I'm so proud of Sandy. Sandy Chaikin was in PR and marketing. All our money was invested in mutual funds and 401k plans, Peter Lynch, Magellan, Bill Miller's Value Trust at Legg Mason. She did very well. And then her business grew, and she felt she needed an advisor. So she got someone at a really good firm who came well recommended. And then 2008 happened, and her account was down 55%. And she was a single working woman with her own business, and she was crushed. So we were together at that point, and I said, you know what, you'd be better served just getting rid of your advisor and the 1% fee and going to Vanguard, buying an S&P index fund. And she did that, but then she started working in our company. And in 2012, having never bought a stock in her life, she started using the simple Chaikin methodology, the power gauge rating, relative strength, and money flow. And she found some of the best winners in 2012, Comcast and eBay. And then in 2014, she really blew the cover off the ball. She found Southwest Air and Skyworks. Now, if you asked her what Skyworks did, she couldn't tell you. But the credentials, as we call them, all lined up. Bullish power gauge rating, positive earnings surprise history, relative to the market, extremely strong, money flowing into it. And recently, she's found small cap stocks and mid cap stocks, not knowing that small cap stocks were starting to outperform, but because they were coming up on the screener. So Sandy is a classic example of how you can go from novice to knowledgeable in less than a year. And she actually teaches that on our webinars. Any of your listeners who want to come to our free webinars, and I would encourage you to come to one of Sandy's and not mine, because she's living proof. She invests every day. 15 minutes a day is all she takes to monitor her portfolio of 8 to 10 stocks and then determine if any of them need to be liquidated.
Mark, the other great point you made there is she's not paying that 1% fee anymore. And, this is a big thing that hits a lot of people is, obviously mutual funds, sometimes these management expense ratios can run up to 2-3%. And you start thinking about that. And if you've got a mutual fund that's running a management expense ratio of 3%, and, on the long term, if the market is doing 6% a year, they're taking half of your money. So they'll sell it to you like, oh, it's only 3%, but it's 3% every year. So the market's up 10, you're getting 7. If the market's down 10, you're losing 13. And obviously if you're only at 1%, that's better. But if you're at 0, using something like the Chaikin, Chaikin analytics here, and you're at 0, you're going to save a lot of money right there in the long term. That 1% adds up in a hurry.
Especially with the low, rates that the online brokerage firm, Sandy trades through Vanguard, $2 a trade.
Yeah, which is nothing.
Almost, nothing. It's nothing. I've never seen it that low in my life. Now, other online brokerage firms are in the $7 range, which is still cheap. But you're absolutely right. And the compounding effect of those, let's say it's a 2% expense ratio every year, year in and year out. Remember, we've always been taught that the compounding value of money works for you on the upside, but it also works for you on the downside in terms of that expense ratio. So I think you're spot on there, Dennis.
Mark, being a 40-year veteran of Wall Street as a trader, stockbroker, analyst, do you have one good story to share with us about the markets? Just, maybe sharing a good lesson for us or something that, sticks out in your mind from your 40 years on Wall Street.
Yeah, I think the most powerful story I can tell here is that I ran the options department at Tucker Anthony, which was a regional firm with 250 brokers and thousands of options traders. 95% of those options traders lost money. And the reason is they didn't understand the importance of having a directional edge, of having some basis for believing that a stock was going to go up if you were buying calls or down if you were buying puts. And I think that's probably still true today. That was 30 years ago. But I'm willing to bet that most options traders lose money because they're making these wild bets with out-of-the-money options that have very little time. So time decay is a killer. And I think that's the most powerful story I can convey. You need a directional edge, whether you're a swing trader, whether you're an options trader. That's what the power gauge gives you. It tells you what the fundamental potential for a stock is. I believe that's a directional edge. And that's the most powerful message I can leave with your listeners, that you need some disciplined methodology to cut through the clutter and focus on a core group of stocks for your long or short trading where you have confidence based on some disciplined methodology that you have a directional edge.
A true Wall Street professional, Mark Chaikin, the founder of Chaikin Analytics, joining us here on Benzinga's Pre-Market Prep. We'll get you back again here in a few weeks and see what the power gauge indicator is predicting in the markets.
Joel, thank you, and Dennis as well. Good to be on.
Thanks, Mark.
All right, 851, S&P's hanging out that 2265 area again. Dennis, are you signing up for that Chaikin Analytics scanner?
It's nice the simplicity of it. Like I was just looking at, and it's got it broken down, very simple. So, if you're, I think his target market is probably that person exactly who's talking about with his wife, coming from, managed money, paying 1%, 2%, 3% a year to coming into, something that's doing it, an algorithm is doing it behind the scenes for you. So you don't have to sit back and, get all this education about the markets and you understand it all. You can follow something like that and it'll help you. I mean, all education is going to help you too, but, maybe it's going to help walk you through that process a lot easier.
All right, 8:51. We got about 6-7 minutes here before we wrap up the show. I see a penny stock moving here. TBIO was mentioned. I see Transgenomic announces licensing agreement with Life Labs. Terms not disclosed. I'm not sure if this is going to turn into be the high flyer that we're going to talk about for the next couple of weeks, but getting a bump up here to 77 cents. So you definitely, you just want to see a move through here. It's had a rough go of it. Getting back over $1 probably be a key, but we'll see if it can actually take out that pre-market high.
You know what I think of penny stocks, so I won't give my opinion on them. Let's go look at imbalances here, 852, ones that are standing out here this morning. Few big ones in the sell side. Not surprising, the financials are littered with some sell imbalances with bullard comments. We've got Citigroup with 227,000 to sell, Bank of America 203,000 to sell. Those stand out from the banks. Wells Fargo also 54,000 to sell. All of them trade down fairly significantly in the pre-market. Coca-Cola 111,000 to sell. Coke gets interesting to me here. If it gets into the lower 40s, I mean, it's still a buck away from there, but this thing, it seems like, and if you want to talk about boring, how I love my boring stocks. Coke is the epitome of boring. This is a stock that typically moves 5 or 10% the entire year. So when you look at something like this, it's moved down here in the last 3 or 4 sessions from 42 to 41. Did get down to 48.3 yesterday. Back again in the lower 40s though, it gets interesting to me. 3.41% dividend. Some value investors I think jump in the lower 40s.
And didn't we have a downgrade to sell from Goldman Sachs in that earlier in the week? Yeah.
That's what really knocked it. That and Procter & Gamble, it downgraded both of them to sell. PG, though, relatively still, I feel like it's more expensive. I just look at it. It's 3.2% dividend as well. I like PG. I played PG already once, that, from 68 to I think it was 87 or 88 bucks. So, if it got back down in the lower 70s, I'd scoop PG up all day. 83, it's still not that cheap.
Dennis, I don't know if you got your sheets with your year-end review, though, but it'd be interesting to see which were your most profitable stocks for the year.
We'll do that tomorrow.
Yeah, we can know that. J&J, I know some of those movers you've been trading for years. Got a couple stocks coming up in the chat here. First, I want to welcome Code Monkey to the chat. Long-time chatter, long-time listener, first time on the show. Wants to take a look here at Ford and, just hanging out at this support here. we took it out, but really not going anywhere. That 1250 area filled the gap from a few days ago. I
Yeah.
mean, you're holding this for the dividend. I mean, it seems like they come out with good news and it pops and drops. But I think, this one, you're holding it for the dividend. If you buy more here, if you're buying at 12.50, I think your risk is down to $12.
It actually, I think the news was more interpreted as bad news is the problem. You had GM, which came out with, great numbers, optimistic for 2017, 2018. Ford thought 2018 is looking good. They were wishy-washy in 2017. I think that's why they hit the stock there yesterday. So a little victim here of what the company recently said there. Auto show is going on. Sometimes that can be a catalyst here too. But GM has went and Ford hasn't, and that is concerning. One thing is, long-term, I own Ford in my investment portfolio. I think with a 4.72% dividend, I don't think Ford is going away. And a lot of people will make you think that electric cars are going to take over the world. Ford's going to have electric cars as well. I don't think Tesla's taking them all out, and we're not going to have Ford and GM in 10, 20 years. And, this is why I look at Ford with a 4.72% dividend. They make good money here. It's your classic value stock. Is it a value trap? I don't know, but I get paid 4.72% to wait, and I think the dividend is safe. So I do own Ford here. I like it here long term. Short term, I don't like the price action from yesterday. But if it's to the lower 12s, it's probably, another area where it might bounce from.
All right, getting a mention here. Fiat Chrysler. Have you seen this chart lately, Dennis? Straight up here. And the only thing I would say would be maybe a little bit of words of caution. 1228, you had a low of 8 or a close of 899. You've had 1, 2, 3, 4, 5, 6, 7, 8, 9 up days in a row. So
Yeah.
not calling the end of the rally here, but man, I mean, stocks can only go up so many days in a row.
Up another 2% here
Yeah.
today. It's starting to feel a little bit like capitulation. You're right. And if you're coming in here now, if you're a momentum trader, I guess you keep playing it that way. But if you're coming in here now, I feel like you're late to the party. I mean, back in November, the stock was $7. You're right. Now it's 11.32. It's had its move. The easy money's been made. Be a little bit of tough sledding probably going forward.
Newly IPO'd. 1121 was your former all-time high. You took it down to 545, so you back up there. So, man, I'd keep an eye. 1121, 11 even. Staying in that $11 handle, closing above it would signify. But 10 up days in a row would have me maybe looking to take some profits. And our final stock of the day, Under Armour, Spencer's favorite stock. Can't get off the mat here. We haven't taught the retailers have been under a little bit of pressure. Low of the move 29, starting to get some accumulation here, but not sure what the catalyst is going to be. Any comments on Under Armour?
Retailers are just under pressure. I know Under Armour, it's a product it can sell on Amazon, so you could say, well, it's not like a Macy's, it's not like a Kohl's, but these stocks are just out of favor right now. It's going to take a long time. I mean, Nike has just been hanging around here in the $52 area, I feel like, for months and months, and obviously UA. Under Armour do move together sometimes. It was disappointing quarter last quarter. Actually, the last quarter wasn't even that disappointing. They just hit it on, okay numbers here. So sentiment towards these stocks is just negative here. I don't know what it's going to take to get it up. But then you think about, November, and the stock was back. If I look at, you got UA and UAA. So if you look at UAA, you can look, the low just at $29 there, 30.55. I mean, it's quiet consolidation above 30 here. Could it be, consolidation go higher? Potentially here, but if it took out 30 UAA, I think I would be nervous.
All right, 858.
I have actually one stock I want to bring up.
Sure.
Or it's two in one, Mylan and Cigna. Because if you look at Mylan yesterday, MYL took a little bit of a hit yesterday after it came out that their EpiPen had been dropped from Cigna's coverage list. Both Mylan and Cigna responded to questions of ours late last night. So the Mylan EpiPen was dropped, but from the coverage list. But Mylan, remember, came out with their own generic EpiPen late last year. I want to say October. And that is still on the coverage list. So the stock took a hit because the non-generic is no longer covered, but the generic, which Mylan owns, is still covered.
Benzinga Pro breaking that story. Mylan trading up 19 cents here on in the pre-market. Hard to get, with Trump comments yesterday, and,
Yep.
this had hit every drug stock. So, this is the same Mylan, I think a victim, a little bit of the macro market here as well. Some individual company news. But Trump had some pretty harsh comments for all the drug stocks there yesterday, and the entire biotech sector got absolutely annihilated. Besides Merck, which had its own positive news. I mean, you look at a stock like Biogen. Biogen was down 12 points yesterday. I mean, there was massacre across every stock. My Sarepta too, which I still own, got hit hard as well in that. So, looking at bounces here, at Sarepta, I probably should have took some profits up there when it got near the $38 level. I was hoping it could get to 40. It did not. And obviously now it's pulled back significantly here. So I need to reanalyze that position.
All right, 9 o'clock. Spencer, you want to preview the final show of the week?
Looking for tomorrow's show, we got Nicola Duca on the show. She actually hasn't been on in like 3 years. We had her on, I think, in 2014. She's a quantitative trend follower. She's a trader for Forex. Trader, Forex, everything. So looking forward to talking to Nicola for the first time in a few years. If you missed any part of our show today, including our chat with Mark Chaikin, you can catch the whole thing. It's on YouTube right after the show, but also the podcast is on iTunes, SoundCloud, and Stitcher. You can find it by going to any of Benzinga's channels on any of those platforms. Also, if you want a free 2-week trial of Benzinga Pro, it's Benzinga's real-time news platform. You can get it by going to pro.benzinga.com or calling us up at 313-723-2000. Please remember that all the information, material, and content from our show is for informational purposes only and not meant to be investing advice. Okay, 9:01 now. We're going to let everyone go for the day. Hope you have a good rest of your pre-market and a good rest of your day. And we'll be back with you folks bright and early on Friday for our last show of the week.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.